Hey everyone, welcome back to MSTR Daily. My name is Matt, and I've got a very special video for you today. This is a supercut of the Q3 2024 earnings call for Microstrategy. It was a phenomenal earnings call. It ended up going over an hour and a half long, and I've been wanting to make a supercut of this earnings call for a while now, and I was expecting that this would maybe be 20 minutes tops, but this earnings call was incredibly important, where Michael Saylor took over an hour to lay out the future plan and the future roadmap for this company, and he ended up just putting on a masterclass. So this earnings call went way over 90 minutes. I did my absolute best to kind of trim it down. I think I got it to just over 35 minutes long. I encourage you to go watch the full thing if you haven't, but I hope that these 35 minutes really capture the heart of this earnings call and so that you can get a really good picture of where this company is headed over the next 3 years. Also, I didn't get the chance to record this earnings call myself, so I grabbed a random stream off the internet at like 360p. So the quality wasn't great, so I went in and got the slides and tried to add that here in post. Unfortunately, Microstrategy has not officially posted the earnings call video, so I can't go grab it from them either, but this is important enough that I wanted to get it out as soon as possible. So enjoy the 2024 Q3 earnings call supercut.
As we continue to focus on acquiring more Bitcoin through our capital market activities, we believe that the value proposition in the company centers increasingly on our Bitcoin Treasury strategy. As a result, we've developed a new descriptor for what we are, which is the world's first and largest Bitcoin Treasury company, the acronym being coincidentally BTC. So what does this mean? We are a publicly traded company that has adopted Bitcoin as our primary treasury reserve asset. By using proceeds from equity and debt financings, as well as cash flows from our operations, we strategically accumulate Bitcoin and advocate for its role as digital capital. Our treasury strategy is designed to provide investors varying degrees of economic exposure to Bitcoin by offering a range of securities, including equity and fixed income instruments. In addition, we provide industry-leading AI-powered enterprise analytics software, advancing our vision of intelligence everywhere. We leverage our development capabilities to explore innovation in Bitcoin applications, integrating analytics expertise with our commitment to digital asset growth. We believe our combination of operational excellence, a strategic Bitcoin reserve, and our focus on technological innovation positions us as a leader in both the digital asset and enterprise analytics sectors, offering a unique opportunity for long-term value creation. Michael will further elaborate on our vision as a Bitcoin treasury company. So where do we go next from here? For those who are familiar with The Hitchhiker's Guide to the Galaxy by Douglas Adams, they would know what is the answer to the ultimate question of life, the universe, and everything. In this science fiction series, an enormous supercomputer named Deep Thought calculated the answer to this question over a period of 7.5 million years. And of course, the answer to the ultimate question of life, the universe, and everything is the number 42. We also think it's the answer to an important question, and we spent about 4 years thinking about this question. We believe it's a unique number with some special characteristics. It's the sum of 21 plus 21. And we all know that 21 is a magical number in the world of Bitcoin. There can only ever be a maximum of 21 million Bitcoins in circulation. MicroStrategy owns about 1.2% of this Bitcoin today. Today, MicroStrategy is announcing its ambitious capital market strategic plan for the next 3 years. From the years 2025 to 2027, the company is targeting to raise $42 billion of capital, comprised of $21 billion of equity capital and $21 billion of fixed income capital, primarily for the purpose of acquiring Bitcoin. Today, we have filed a prospectus supplement for a new $21 billion ATM equity program. This is the largest ATM in the history of capital markets. Fixed income capital can consist of various debt and debt-like instruments, including convertible debt, preferred equity, hybrid capital, or other similar instruments. So I'd like to provide more detail on our capital raising targets over the next 3 years. For the year 2025, we target raising $10 billion total, comprised of approximately $5 billion each of equity capital and fixed income capital. For the year 2026, we target raising $14 billion, comprised of approximately $7 billion each of equity capital and fixed income capital. And for the year 2027, we target raising $18 billion, comprised of approximately $9 billion each of equity capital and fixed income capital. We plan to address increased interest costs from any incremental fixed income capital raised through efficient management of our overall capital raising plan, including alternating between equity raises and debt raises as appropriate to maintain our overall intelligent leverage. By managing our treasury strategy in this way, so long as we have continued access to equity capital on favorable terms, we believe we will not be limited by the cash flows from our software business to scale up our Bitcoin capital markets initiatives.
Now, turning to our Bitcoin strategy, we had another very successful quarter in adding more Bitcoin to our treasury reserves as we acquired 25,889 Bitcoins in the third quarter for approximately $1.6 billion at an average price of $60,839 per Bitcoin. As of September 30, the company held a total of 252,200 Bitcoins acquired for an aggregate cost of $9.9 billion, or approximately $39,000 per Bitcoin. I will speak to our overall treasury operations for the quarter in a moment, but a significant result of redeeming our 2028 senior secured notes in Q3 was to release all Bitcoin that was held at the Microstrategy entity. And now 100% of our Bitcoin holdings are fully unencumbered, including now all Bitcoins held at both Macrostrategy and Microstrategy entities. We will adopt the new FASB fair accounting rule, which will require fair value treatment for Bitcoin holdings when the rule takes effect in Q1 2025. As of January 1st, 2025, we will recognize a cumulative adjustment to the opening balance of our retained earnings, reflecting in large part the significant difference between the market value and carrying value of our Bitcoin holding. To assess our performance in achieving this strategic objective, we introduced a new key performance indicator last quarter, which we refer to as BTC yield. To reiterate again, we define BTC yield as the period-to-period percentage change in the ratio of our total Bitcoin holdings to our assumed diluted shares outstanding. We use this KPI to help assess the achievement of our strategic objective and to evaluate capital allocation decisions. If we increase our total Bitcoin holdings over a given period at a faster pace than we increase our assumed diluted shares outstanding, we achieve a positive BTC yield. I should note here that BTC yield is not equivalent to yield in the traditional financial context. It is simply a measure of the percentage change period to period in the ratio of our Bitcoin holdings to our assumed diluted shares outstanding. Building on the 21-21 plan Phong discussed, we have a clear strategy to increase our Bitcoin holdings and deliver a positive annual BTC yield. Our year-to-date 2024 BTC yield of 17.8% has surpassed the annual BTC yield in 2023. Last quarter, we laid out our target to achieve a BTC yield of 4 to 8% annually for the next 3 years through 2027. Today, we are revising our target up to achieve BTC yield of 6 to 10% per year for each of the next 3 years.
I was really excited about this call because this is the chance to share our strategy and our vision looking out over the next 3 years. And we're going to be doing it in more detail than we have in the past. Bitcoin's about a $1.4 trillion asset class. And as you can see, Bitcoin is gradually going to draw capital from equities, from real estate, from bonds, from currency derivatives, and of course from gold. Not only is MicroStrategy outperforming asset classes, it turns out that MicroStrategy has outperformed all 500 of the S&P 500. So we looked at everybody. We even looked at companies that weren't in the S&P 500 on August 10th, like Tesla, like Supermicro. And MicroStrategy is in essence, using a Bitcoin strategy, come out of nowhere to get 1,989% growth in the equity value over this time period. And you can see it's not even close, right? I mean, we've dramatically outperformed Supermicro. We've dramatically outperformed NVIDIA. And then when you get down to the number 5 or number 6 company, we're 4x. And so this is really a testament to the power of digital capital if you understand it properly. If you look at the top 10 performers in the S&P 500 and you consider options open interest, Microstrategy is actually number 7. We're in the top 10, even though we're much, much smaller than most of these companies, right? Obviously, we're not as big as a Walmart or a Coca-Cola or a McDonald's or any of the household names you've heard about your entire life. But of course, because we're high volatility, the options market wants to trade those options. So we jump into the top 10 leaderboard because we have a high volatility balance sheet. If we look at daily trading volume and the top 10, you can see MicroStrategy again jumps to number 7. We're in the top 10 out of all the S&P 500 companies in daily trading volume. And it's a pretty extraordinary outcome given the fact that in some cases, these companies are 100 times bigger than us. And of course, if you look at the impact of that volatility on a market cap weighted basis, if you compare open interest in the options market as a percentage of market cap for all 500 companies in the S&P 500, MicroStrategy is number 1. We are the most optionable per weight or per market cap stock in this entire universe. And if you look at daily trading volume, the liquidity of the equity as a percentage of market cap, we are also number 1. Another way to say it is MicroStrategy is the hottest stock in this universe, right? Volatility is vitality, as we say. This is it's totally counterintuitive because everybody else in the world thinks you sell equity, you dilute the shareholders. That's true if you don't have a use of proceeds that grows faster and yields more than the S&P 500 index. The cost of capital is the S&P 500. If you want to be positively polarized to capital, you want 2 conditions. You want to be able to invest the capital in something that beats the S&P consistently. That's the first condition. It needs to have performance. The second condition is you want velocity. You'd like to invest the capital in 5 days, not 5 years. If you can invest the capital in 5 days and then you can show that it actually beat the S&P index, then you've actually got the holy grail. Now you've got a magnet which is attracting capital. And MicroStrategy has pioneered this by combining capital markets activity with Bitcoin as a Treasury reserve asset, with the embrace of BTC yield, and the BCT yield shows that, in fact, we acquired the capital in a manner that was accretive to our shareholders as opposed to dilutive. And now here's another slide that no one's ever seen before in one of our presentations. Many of you know about MSTR stock. And, you know, what I've said is, oh, MSTR stock, it's beaten the S&P 500. And now some of you know about options. MSTR options are more traded, you know, pound for pound than anything else in the S&P 500. And so you know that we are the volatility winner. You know that we're liquidity winner. You know we're the performance winner. What you might not know is that MicroStrategy has sold 6 convertible bonds. And if you had bought any of them, you're up 224%, 86%, 67%, 90%, 41%, or 54%. They've all been successful. They've been some of the most successful bonds ever sold to the convertible bond market. And what that means is if you had bought $1 million of Bitcoin on the day we sold the 25 convert, or $1 million of the convert, or if you just across all of these, if you bought $1 million of each of them in the convert, you would have got a 90% return. And if you had bought $1 million of Bitcoin, you would have got a 47% return. So not only do you get the return of Bitcoin, you also get the downside protection. And in this particular case, I'm kind of delighted to say we outperformed Bitcoin, not with our equity. We outperformed Bitcoin with our bonds. That's in the market right now, and that creates a lot of leverage. And one of the results is MSTR equity outperforms Bitcoin. That's a 1.5x or more. Historically, we're almost 2x leverage, but I mean, it changes every day. Our goal, right, with the equity is use intelligent leverage to outperform Bitcoin. And the way that we outperform is, on the upside, we have to have some leverage on the downside. And what we're doing is we're stripping the volatility, stripping the risk, stripping some of the performance out of the fixed income instrument. And then that benefit accrues to the equity holder. And so you see MicroStrategy straddling both sides of the spot market. Now, because we straddle both sides, that MSTR equity that trades, 1.5 times the performance of Bitcoin, it happens to be 1.5 is volatile. So if Bitcoin's 50 vol, we're 75 or 80 vol. If Bitcoin's 50 ARR, we might be 75 or 80 ARR, right? So who wants that? Well, the derivative traders want it. So if you look at these derivatives like MSTX and MSTU, in a matter of weeks, they raised more than $1 billion of capital by offering the proposition of 2 times MSTR. But if you think about my chart, what they're really offering is if MSTR is 1.5, they're offering 3. If we're 2x, they're offering 4. So they're offering leverage to people that want that leverage, and they're long Bitcoin investors. I showed you how MicroStrategy has a large options market. Well, there are a lot of people that want 5x or 10x leverage, and the best way to get it, in their view, is a high volatility equity with deep liquidity. And I showed you how MicroStrategy is very liquid in the spot and very volatile. And so if you're volatile and you're liquid, then the only other question is, are you credible? Are you trustworthy or transparent? What are we going to do? And then the thing about MicroStrategy is every day for the past 4 years, we've said one thing: Bitcoin, long Bitcoin, we're going to acquire Bitcoin. So if you're a trader and you're trying to figure out what's MicroStrategy's strategy, you don't have to worry we're going to hedge. You don't have to worry we're going to trade against you. We're long Bitcoin. We're going to be 1.5x Bitcoin. And that means you can create MSTX or MSTU. That means you can create MSTY. It means you can create an options market. It means that if you want to short Bitcoin, then we're giving you extra juice to short it. If you want to go long, we go that way. And so you can see, of course, those 3 securities above the baseline offer high volatility, high leverage, and they're built on a Bitcoin Treasury company that has a large pool of permanent capital and has an adept treasury operation. You are adding value to the crude oil when you refine it and purify it. When we create securities from Bitcoin, we're adding value. We sell $100 million of a security backed by 50 million of Bitcoin, and we capture $50 million in a BTC gain. And that is the value that we create for our shareholders. That BTC gain is reflected in the BTC yield that we show you. We're really excited to increase our targets for BTC yield. We took them up by 2% from 4 to 8 to 6 to 10. But, here is, I think, where it's appropriate for me just to make a few comments, right? Like, as I said, I think our company's misunderstood, and I also think it's undervalued. Investors have been concerned, about a lot of things. They've been concerned about our ability to raise more capital via equity and debt issuance. I think, as you can see from our performance so far and the 21-21 plan, those concerns are unfounded. There's no reason that we have to stop issuing fixed income instruments. We're not encumbered by any EBITDA covenants or any particular other cash flow covenants that'll keep us from doing that. And as you could see, some people have asked, can you keep doing ATMs? And I think we put that to rest by filing a $21 billion ATM. We're going to expand, and we're going to accelerate our treasury operations and our capital raising activities based upon, the performance you've seen. And with our newfound insights, we just keep getting, we get new insights every single quarter in this market, and we're learning. But as we learn, we get a bit more sophisticated in how we do this. Now, I'm going to wade into the big premium debate here. Like, what's the appropriate premium for net asset against net asset value of MicroStrategy? And I just want to make one obvious point. We're a growth company. We're a Bitcoin treasury company, and we are growing. We are built on an asset, Bitcoin, which is growing 50% a year. And we are growing with that asset. If you review the market for common multiples of growth companies, if you had a 20% growth company, oftentimes they're valued at 25 times 40, 25 to 40 P to E. If you have a 30% growth company, oftentimes they're valued at 35 to 55 P to E. If you have a 40% growth company, they're valued at 45 to 70 sometimes. And a company growing 50% is oftentimes valued at 60 to 100x. And of course, Bitcoin's growing 50%. We don't know what it'll do in the future, but my personal long-term view is over 21 years, Bitcoin's going to grow 29% ARR. And looking backward, it's definitely been growing fast, 50% every year for 4 years. So, how do you think about the value of the BTC, the Bitcoin treasury operations, right? Not the balance sheet, not the reserves, but what's the operation worth? And, if you expect 30 to 50% growth for Bitcoin, then it's not unreasonable to have a 30 to 50x multiple for that growth. And a 30x to 50x multiple means if you were to look at this 6 to 10% target, 30 times 10 is a 300% premium to net asset value. 50 times 10 is a 500% premium. So you're talking about an operation that's 3 to 5 net asset value. And if you tack on the actual treasury, you go from there and you realize you're talking about an enterprise that could be $80 to $100 billion. And you could establish it just by looking at this and realizing it. These are not US T-bills that we're holding on our balance sheet. If you had a US Treasury bill that was growing 0% a year, you would multiply it times 20 in order to get a right multiple. But Bitcoin's growing more than 0% a year, so 20x is probably conservative. So that's one way to approach it. Another way to approach it is just look at the BTC gain, and that is what's really happening here. When we have a 5% BTC yield in the quarter, that's the same as acquiring 12,500 Bitcoin for our shareholders without dilution. That's like 50,000 Bitcoin on an annualized basis. That's like a $3.6 billion annualized BTC gain. If you had a $3.6 billion annualized gain and you put a 30 to 50 multiple on it, you've all of a sudden got an operation that's got a $108 billion to $180 billion value. And then you tack on the other 18 billion for the Bitcoin and you see where you get, it's like the operation 6 to 10 times net asset value plus the reserves. And so most of the market doesn't understand it. And most of the debate has been this assumption that we're somehow some holding company that just got lucky and occasionally sells some equity and we're not adding any value to the market. But hopefully, if you look at these numbers I've shown you, you realize that the value we're adding to the market is to create high performance, high volatility securities for one group of investors and do that based on our unique structure, and provide low volatility, lower performance, lower risk securities for another set of investors. And in that regard, we are the leader. Nobody else has $18 billion of permanent capital. In order to create a company like ours, you're going to have to actually go 100% all Bitcoin, and how do you do that at our scale? If you do it with, if you do it with a big tech company, they'll never be 100% Bitcoin because they got too much other stuff in their enterprise. And if you do it with a $1 billion company, they're not going to catch us because, as you could see, we're not slowing down. We're actually we're going to target $10 billion of capital next year. So unless you're going to target $42 billion of capital in the next 3 years, then MicroStrategy is kind of in a unique position. So if you start thinking about it like that, and I'll just leave one other thought with you, which is and again, like I don't have a crystal ball, there's risk in all of this, but you understand our 21-21 plan. If we achieve our 21-21 plan, if Bitcoin grows in excess of 21%, if that happens, MicroStrategy is capable of BTC gains in excess of $10 billion a year within 4 years. And so thinking about a business like that that's growing more than 20%, starts to put in perspective that, yeah, we shouldn't just be valued based on our Bitcoin reserves. The real issue is, what are the opportunities for us as a Bitcoin treasury company? Phong said it, but I'll say it again. The world's largest ATM equity offering is to buy Bitcoin. And, you could look at it and say, oh yeah, great. I get it. But do you really get it? Here's the big idea. The reason that this is the largest ATM equity offering and it is to buy Bitcoin is because any other company that announced a $21 billion ATM would be expected to invest the capital in something dilutive. If you sold 21 billion of equity and you bought T-bills, you would be losing $2 billion a year guaranteed. Bitcoin is the best use of proceeds, maybe in the history of the capital markets. This makes total sense for our investors. In fact, I can tell you, I've met with a lot of our investors. Their number one concern isn't, are you going to dilute us or issue more equity? Their number one concern has been all along, you're not going to stop, are you? Do you have to stop? Because we don't want you to stop. So this is actually addressing concerns and the needs of and the benefits that accrue to our MSTR common stock shareholders. And I think it just illustrates the strength of our overall treasury strategy and the strength of the Bitcoin market. Okay, you've been troopers. You've stayed with me the entire time. I appreciate your attention, and I want to end with these principles. And I think they're very important because if you're a MicroStrategy shareholder, you're coming with us on this journey, and hopefully you see that we're in this for the long term, and we want to be as transparent and consistent and reliable and understandable as we can possibly be to you. So these are our Bitcoin Treasury Company BTC principles. 1, we are going to buy and hold Bitcoin indefinitely, exclusively, securely. Right? The company is built on this idea. If you're waiting for us to hedge, to sell it, to get out on top, if you're looking for us to diversify, go elsewhere. That's the number one principle. It's very important. Everything else is built on it. Number 2 principle. We're going to prioritize MicroStrategy common stock shareholders for long term, and we're going to prioritize long-term value creation. If you own MSTR, you're my partner. You and I are in it together. When I meet with the MSTR shareholders, we talk about their ideas. They say, you should do an ATM. Well, how much leverage should we take on? What should we be willing to do or not do? How do you feel about this? Right? And their interests are my interests. They are the management team's interests. And if there's any question in your mind, like, what do you want to own for maximum performance over the next decade or 20 years, right? The way we keep score is MSTR performance. Every investor is our respected counterparty. If you've got a call option on MicroStrategy that expires in 30 days, I respect you. I'm glad you do business with us. We appreciate the support, right? But we're not going to run the business in order to maximize the call option on day 29. If the call option expires out of the money, I'm sorry, I couldn't do anything about that. We're going to optimize for the long-term common stock, because otherwise nobody can do anything else. All of the other securities above and below the common stock wouldn't work. If you want to short us, have at it. I respect that too. By all means, more the merrier, because you short $1 billion, you're going to buy $1 billion when we need you to buy it. And so it's fine. But of course, don't make the mistake of thinking that I'm going to serve your interests either. Right? Our interests are to make sure that we make good on our obligations. If we make a promise, we will meet our promise, to our creditors, to everybody else. And that just means be consistent, be transparent, be respectful. I want people to know they can trust us to do what we said we're going to do. Structure MSTR to outperform BTC. No offense to BTC. I love BTC. I tweet about BTC every day of my life. But MicroStrategy stock is going to be intelligently levered, and our goal is to be more than BTC, more volatile, higher performance. I'd be happy if we're 1.5. If you told me we were 2, I'm like pleasantly surprised, and I love it. But we can't guarantee what that number will be. We can't even guarantee we will. But what I can tell you is our principle is we will structure the business so rationally. Everything we've done is with the aim of MicroStrategy being like a 1.5x BTC. We want a comfortable, responsible boost. We're going to acquire BTC continually. We're going to keep stacking. And the way that we're going to stack is while pursuing positive BTC yield. Look, we could sell the stock, at a negative premium and add BTC, but it would be dilutive to the shareholders. There are a lot of times when we could raise capital and it's actually quite accretive, but it's not but we don't like the spreads and it looks worse than we think they'll be like next week. And so we'll just hold out and wait because we want to support the market and we just don't think it's appropriate. So we have the ability to move aggressively when the opportunity presents itself, and we have the ability to wait and do nothing when that's the right thing to do. And so understand it, and we're going to be pursuing it, because at the end of the day, we generate BTC yield, we generate BTC gain, we put value in the Bitcoin operation. And that's the motor that drives the common stock, and it drives Bitcoin. Why do I single out fixed income? Because fixed income is what creates the most leverage that drives MSTR common. And when we do fixed income correctly, we're going to generate that 1.5x or 2x Bitcoin return. And that makes everybody happy. And then 9, and I'll end with this. We're going to promote global adoption of BTC as a Treasury reserve asset. Promote it to countries, promote it to cities, promote it to states, promote it to companies, to public companies, promote it to private companies. There are no losers on the Bitcoin standard. There are only varying degrees of winners. And so with that, I would like to thank everybody for your time. And I guess, Sharish, let's go to questions.
Andrew, can you please provide a framework around how you might cover interest expense if we continue to issue convertible or fixed income notes that might be beyond servicing, that might be beyond servicing from the software cash flows?
Sure. Thanks for the question. This is in the near term. I guess I'd say I mentioned earlier we redeemed the 28 notes, which was our highest cost debt, and by doing so, we reduced our annual cost by about $30 million, or about 50% of our debt load. So that obviously frees up cash in the near term. Taking out the 28s also released us from all the covenants. So there may be some opportunities to get creative there. And lastly, but probably more importantly, the 21-21 plan we plan to raise, $42 billion of capital. And that capital could be used to service interest if needed. So overall, I think, we feel pretty good about our ability to issue new debt, issue new fixed income securities, and we'll look forward to those opportunities in the future.
Given your ambitious ATM plan, are you concerned about the controlled company status, and how do you view it in the long term?
I have slightly more than 50% of the voting stock right now, and as we raise additional capital, I expect that my voting interest will slip below into the high 40s. If we raise a lot of capital, it might move into the mid 40s or the low 40s, but I'm not at all concerned about it. First of all, we're going to run this company in partnership with our common stock shareholders, and I meet with them routinely. There's nothing that we're going to do that they're not going to want us to do. And so, perhaps in order to get over 50%, I might have 2 or 3 of them join with me on occasion, but I actually look forward to that. So I think our common stock shareholders should know that they're our partners and they deserve a say in the company. They'll have a greater say in the company, and that's fine. I don't really think there's any reason that our company can't operate just fine with me having 48% of the vote instead of 52% of the vote. As you can see our principles, you can see our plan. I think that substantially I'll have enough voting shares to ensure that the company stays on track, but I'm not at all concerned about issuing additional equity.
Thank you, Michael. I think with that, we will conclude the Q&A portion of the webinar, and I will hand the call over to Phong for the final closing remarks.